let you know that the embargo is now officially lifted. And with that, let me invite Dong to kick us. Dong, over to you.
Thank you, Karen. Good morning, everybody. I am Dong He, the new Chief Economist of AMRO. I'm very pleased to meet you all. I hope very soon I will meet you in person too. So today's update to our regional outlook, we expect to see a slower pace of growth in ASEAN+3 region. ASEAN+3 is expected to grow at a slower pace of 3.8% this year and 3.6% in 2026. This is a downward revision from our earlier forecast in April, mainly to reflect the impact of US tariffs and rising external uncertainties. Inflation is also expected to moderate across the region. However, the region entered this period of challenging period of tariff turbulence from a position of relative strength and resilience. Most regional policymakers have acted early to cushion the impact of the trade shock, and the policy space remains available for further support if needed. The region's financial markets have also shown resilience. Regional currencies have generally appreciated against the US dollar amid growing market concerns over US policy uncertainty. But let's be clear, the risks ahead are significant. If tariff measures continue to escalate, global trade could face substantial disruptions. The outlook gets more challenging if we add in additional risk factors, such as tighter financial conditions and commodity price spikes in light of the continued geopolitical tensions. In this kind of environment, regional integration isn't just important, it's urgent. By pulling closer together and backing rules-based cooperation, ASEAN+3 can realize its growth potential and build a stronger, more resilient future. I think that's really the message I want to deliver. That is, the rising tariff and policy uncertainties from the United States provide a good opportunity for much tighter intra-regional integration. ASEAN+3's diversity, in my view, is some of its greatest assets. Economies in this region are at different stages of development with varied resource endowments and comparative advantages. As you all know, international trade are really based on comparative advantages. So the regional economies can forge more integrated supply chains and production networks. This diversity, when leveraged through coordinated policies and integration initiatives, will transform potential vulnerabilities into collective resilience for the region. So with that, let me stop here. And of course, I will be happy to answer more questions, but I will pass the floor now to Alan, please.
Alan, over to you, please.
Right. Thank you so much, Dr. He and Karen. And good morning, everyone. In the next 10 minutes or so, I will walk you through the key messages from our July update. So Dr. He has already covered most of this, but let me just repeat the key highlights. First, ASEAN+3 growth is slowing. And against a backdrop of the ongoing tariff uncertainty, we have revised down our forecast for the region from our April projections earlier. Second, high uncertainties persist, with the escalation of US protectionist policies remaining the most salient risk to our outlook. Third, regional policymakers have responded proactively. Some have already eased monetary policy and increased fiscal support to cushion the impact, and most remain ready to provide additional policy support as needed. This proactive stance, combined with the region's fundamentals, positions us well to navigate the challenges ahead. Now, let me begin with where we are today. Growth for ASEAN+3 in the first half of 2025 have remained firm. Growth was anchored by domestic demand, with private consumption across ASEAN economies having stayed robust, supported by favorable labor market conditions and moderating inflation. In the +3 economies, China, Hong Kong, Japan, and Korea, consumption has also improved, although at a more measured pace. Now, external demand has also provided support, though with some very important nuances. We saw a surge in export growth in the second quarter, actually doubling from the previous quarter, as businesses front-loaded shipments ahead of the anticipated tariff increases. In particular, global semiconductor demand remains very robust, although growth is actually moderating from an almost 20% last year to a projected still robust but much lower 11% this year. However, we are already seeing signs that this front-loading effect is dissipating. US import demand has begun to slow, and manufacturing purchasing managers' indices or PMIs across the region have softened, with more than half now in contractionary territory. On the inflation front, after a brief spike in June driven by the Middle East tensions, global energy prices have normalized, and overall, we are looking at headline inflation having maintained a downward trend, and we call inflation remaining well contained across the region. Now, turning to our outlook, we project ASEAN+3 growth at 3.8% in 2025 and 3.6% in 2026. And this represents a downward revision from our April projections. And this primarily reflects the impact of the US tariff as well as the impact of a broader slowdown in the global economy. For the +3 economies, we project their growth to be at 3.7% this year and 3.4% next year. For ASEAN economies, growth is projected to be at 4.4% this year and 4.2% in 2026. Now, a note about our tariff assumption for our forecast. For our baseline, we are assuming tariff rates from August to be as per what we know now, based on the bilateral letters from the US, as well as the negotiated bilateral deals so far. Now, this excludes the development this morning with Philippines and Japan. Now, given this, if the tariff rate turns out to be lower, then there is a potential upside to our forecast. Similarly, if the tariff rates are higher, then our growth will be lower. And this is something that I will come back to. And let me just touch on a bit about the development this morning with regards to the announcement by the US president on the tariff and on the deals reached for the Philippines and Japan. We have yet to incorporate this into our outlook today, and we would need to study the details as they come out eventually. But for the moment, in the case of the Philippines, our assessment is that the impact will be very limited, and it's unlikely that we will materially change our forecast, given the changes is actually from 20% to 19%, and the fact that the economy of the Philippines is more domestic structured in a way. For the case of Japan, the details are still unknown, but it does look like there will be an upside to the outlook that we have today. The most important details that we would need to ascertain is actually the treatment of the tariff on autos. Right? Autos represent 30% of the export to the US from Japan. And the 15% that was announced by the president, we are not sure whether that applies to the case of auto, which is actually sectoral based, and that is currently facing a tariff of 25%. So this distinction is key, because if the auto is not included, it's exempted from this 15%, then the average tariff rate from Japan would be 21% from 25%. So it's not a big change, although it is lower. But if it is included, then it will drop from 25% to 17%. This is based on our internal calculation, so it's quite material. At the current juncture, we do not have the details, and we will continue to study the situation. Now, let me proceed to inflation. We expect inflation to remain low and stable at around 1% for both this year and the next, and this reflects stable commodity prices and the subdued demand pressure from slower growth. Now, let me turn to the risks facing our outlook. Downside risks remain very high, with the most salient being the escalation of US protectionist policies. Now, the tariff situation continues to be highly uncertain, and since April 2nd, we have seen multiple rounds of adjustments, bilateral negotiations, and policy reversals. Currently, the region is expected to face an average tariff rate of about 26% in August, and this includes the latest development this morning. But the tariff rates, the effective tariff rate across the region vary significantly across different economies. As we all know, some economies have reached preliminary agreements for lower rates, but most still face tariffs that are close to or higher than the initial reciprocal levels. And what makes this particularly challenging is the unpredictability. Terms can change with little warning. Bilateral negotiations so far have yield opaque outcomes, and the definition of critical concepts like transshipment remains unclear. And the US administration has also threatened to levy tariffs on currently exempted sectors, such as semiconductors and pharmaceuticals. Should tariff be expanded to cover these currently exempted products, which represents over 40% of the regional exports to the United States, then the economic impact would be substantial. And given this uncertainty, besides the baseline outlook, we have also ran an alternative, more adverse scenario for the outlook of the region. Now, under this adverse scenario, we assume tariff for China to revert back to the April 2nd rates, BRICS aligned economies to face an additional 10% tariff, and most importantly, the previously exempted sectors would incur a 25% tariff. ASEAN+3 growth could fall below 3% in 2026, and this will mark our lowest growth since the Asian financial crisis, excluding the pandemic years. That said, even in this adverse scenario, we are not expecting recessions in any of our economies, but the impact could be further exacerbated by other non-tariff protectionist measures, such as tighter investment screening and expanded export controls. Now, in this environment, our key message is this: it's crucial for regional economies to stay committed to a rules-based, open and transparent multilateral trading system with the WTO at its core. Now, despite these challenges, let me emphasize that, as what Dr. He has mentioned at the beginning, that ASEAN+3 has entered this environment from a position of relative strength and resilience. Regional policy makers have already responded proactively. Since April, central banks in half of ASEAN+3 economies have eased monetary policy, while several governments have implemented targeted fiscal measures specifically to cushion the tariff impacts. Most of our economies continue to have adequate policy space to provide further supports when necessary. But more broadly, our region has several key sources of resilience. One, domestic demand now drives the bulk of our growth, providing a buffer against external shocks. Secondly, our export markets are now more diversified. US export share for the region has fallen from about 24% in 2000 to now below 15% today, while intra-regional trade now accounts for 45% of our total exports. But perhaps more importantly is that in the face of the current environment, regional economies have also stepped up commitment to strengthen regional cooperation and further deepen integration of our economies. And these efforts will help to further build resilience for the region going forward. Now, to conclude, while the near-term outlook has become more challenging, ASEAN+3 retains the fundamentals and the capacity to weather the current environment. Let me end here. Thank you.
Thank you for the presentation, Alan. We now have time for questions. As a reminder, you can type your questions in the chat box, and please do include your name and media affiliation so we know who we're hearing from. We've received a number of questions in advance. Some of your questions are similar, and we'll group them for efficiency. Let's begin with this question from Taising and also Lianhe Zaobao. President Trump has threatened to impose tariffs on several ASEAN countries on August 1st. How do you view the prospect of negotiations between ASEAN members and the US?
Thank you, Karen. Let me take that question. As you all know, these tariff negotiations are bilateral in nature. And of course, AMRO is not privy to these discussions. And what we can say is that so far, the approach has really given us a lot of uncertainty. I think this is the part that worries us most, is the uncertainty that's created for the business environment. When we think about economic prospect, of course, households and firms make decisions based on judgments about key economic variables, and tariff here, of course, is an important one. What does it do? Tariffs basically raise the prices of the products that we export to the US market. Of course, that's a generalization at a very high level, because for individual products, what's the impact on the ultimate quantities that we can sell, exporters can sell to the markets depend on many factors. It depends on the so-called price elasticities, in the sense that if the price is raised by $1, what's the impact on the demand for the volume? And of course, it depends on the profit margins of the exporters, whether they can absorb some of these cost rises through their profit margins. So there are a host of assumptions we have to make when we make projections. But ultimately, I think it's the uncertainty that these tariff negotiations are creating that's most damaging for the business decisions that our producers and exporters in this region have to make. And of course, their employees have to make consumption decisions based on how much wage they expect to receive from their business, from their employers. So these uncertainties would have damaging impact on the business decisions and the consumption decisions of households and businesses. That's all I can say. I'm sorry, this is the uncertainty we have to live with. Thank you.
Thank you, Dong. The next question is a similar one sent by the 21st Century Business Herald, Zhao Bao, as well as Business from Indonesia. The question is, what are the growth prospects and risks that ASEAN faces? Will the growth for ASEAN+3 slow down in the future? And in responding to the risks of US tariffs, what policy space do ASEAN+3 economies have to buffer short-term shocks?
Thank you, Karen. Let me again take up that question. So when we think about the risks facing the region, as Alan has just laid it out, the most important, of course, is the higher tariffs and the uncertainties that the region faces. To understand the importance of this risk, you have to have a picture in the mind. ASEAN+3 is really one of the most open regions in the world, in the sense that we trade with each other and trade with the rest of the world significantly. So let me just give you a number for ASEAN region. Total trade, that's imports plus exports, are about 96% of our nominal GDP. So it's maybe just 100%. That's the kind of picture you want to have in your mind for ASEAN economies. So that's a lot of trade. And for ASEAN+3 as a whole, it's close to 50%. And of course, as you know, Japan, Korea, and China, these are very large economies. They are still pretty open on average. When we trade with each other, we have to think about what are the trading partners. The US is a major trading partner, but it's no longer necessarily the most important. So China has risen as a major trading partner for many of the economies in the region. So for ASEAN+3 as a whole, both the US and China are major trading partners. So that's one reason why US trade policy has a very important influence on the risks facing the regional economies. That's one. Second, the second risk I would like to highlight is financial conditions, global financial conditions. As you know, the ASEAN+3 region, in the region, the use of US dollar as an international currency is very important. So the US dollar is a major funding currency. So when the major central banks, like the US Fed, change its monetary policy stance, that would affect monetary conditions in the region. So we have a significant global financial cycle going on that may affect the Asia region as well. So in this case, if inflation situation in the United States develops further, at the moment, as you can see, there's quite a bit of inertia in the inflationary developments in the United States. And the Fed is basically in a holding mode. They are taking a wait and see attitude. So if that changes, if there is a inflation spike in the States because of these higher tariff developments, then financial conditions may tighten, and that would affect the region, the ASEAN+3 region as well. Now, the third risk we highlighted is, of course, commodity price hikes associated particularly with geopolitical conflicts. The oil prices spiked briefly, of course, when the Iran-Israel conflict took place. It has come down since then, but that risk in itself is important. As many of you know, the regional economies are dependent on oil imports coming from the Middle East region. So that's another risk we wanted to highlight. Now, having laid out these, I think the question really asks about the policy space. So we can think about this issue from both a short-term reactions or policy support we can provide to the private sector, but also think beyond just the conjuncture in terms of the medium-term policy issues we need to deal with in order to increase the resilience. If a similar shock happens in the future, how can we become even more resilient to this kind of external shocks? So in the short term, certainly macroeconomic policies can be very, very agile. As you already know, and Alan has highlighted, monetary policy authorities in the region have already reacted, right? Since the tariff situation became an important risk. Half of the central banks or monetary authorities have already eased, and some governments, quite a few governments have also launched fiscal support, targeted fiscal support programs. And we believe that there's more room if further support is needed. Most governments in the region have pretty sound fiscal positions in terms of their debt levels, and so further support can be provided, and the central banks, of course, can also lower interest rates or provide other policy support. Now, as you all know, inflation has been moderating in the region. So that creates space for central banks to lower rates. Importantly, I want to point out that, as I mentioned earlier, exchange rates of local currencies against the US dollar have appreciated. And that also creates some space for the central banks, because traditionally, some central banks are concerned that if they lower rates, that create pressures on the exchange rate, and the exchange rate against the US dollar can become a so-called shock amplifier rather than a shock absorber. So in the current situation on the exchange rate side, we feel actually most of the regional economies are in a good position as well. So all these factors that I laid out would provide policy space.
Pag umaga, ginawa nga namin yun dati with ni Iris. Tapos kumain kami ng break.
Hi. Okay.
With that, let me stop here. Thank you.
Thank you, Dong. We do have many questions to go through, so we'll appreciate if those online could mute your microphones. The next question comes from Khmer Times as well as BBC. The US tariffs have increased competition among ASEAN nations. How can Cambodia handle this competition and maintain a steady growth path? Can smaller economies like Cambodia and other ASEAN countries strike a perfect balance between the US and China in terms of economic relations?
Thank you, Karen. Let me take up take up this question. Maybe let me take the second part of the question, because since both BBC and Khmer Times have raised this, I don't think there's any perfect balance, but it's important to realize, as I mentioned, that both the United States and China are very important trading partners. China, of course, is an integral part of the ASEAN+3 region. Now, when we think about these big economies, their roles are somewhat different. Traditionally, the US is the final destination for semiconductors, pharmaceuticals, other manufacturing products, including garments, where Cambodia is really a very important player here. So that's why I think the question for Cambodia is how the Cambodian economy can deal with very high tariffs from the United States, since the US is really the largest trading partner for Cambodia in terms of exports of garments. Now, in recent years, when we think about the relationship between the region and China and the US, there has been some quite notable changes. In terms of value-added exports, China actually is now the largest partner for ASEAN+, for ASEAN and +2, I think, in Northeast Asia. For these countries, China has become the largest destination for final exports in terms of value added. What does that mean? That means when we export goods and goods, we have to take intermediate products as well. So we have to think about what is the value added. So when a product is sold in China, which countries are important in contributing to that the value added of that product, right? Vice versa for the United States as well. So the picture is changing, but I would say that there will be further opportunities for the region to become much more integrated in terms of final demand. As I mentioned earlier in my opening remarks, comparative advantages are the foundation for international trade. Nations trade with each other because the global markets are of much larger scale. Regional markets are much larger than domestic markets. So countries can specialize according to their comparative advantages when they decide which sectors, which products they are very good at in producing. And when they decide which products and services they're good at, of course, they have to consider the productive capacity, the technology. So in this sense, the region also can integrate more because Japan, Korea, and China, they are really climbing the technological ladders very fast. They are at the frontier now globally in many products, in many manufacturing sectors. Now, coming back to Cambodia, Cambodia, of course, has negotiated with the United States, and still it faces higher tariffs on garment exports. So I think in the longer term, in the short term, as you can see from the forecast numbers, they will be impacted negatively. So this is a demand shock that the Cambodian economy has to face. I think the strategy going forward is really to intensify efforts to diversify its export markets. It has already been doing this. And of course, it's also exporting agricultural products to China. So I think all these efforts will have to be taken with more intensity going forward. So let me stop there. Thank you, Karen.
Thank you, Dom. Now we're moving on to Indonesia. And this question comes from Jakarta Globe, Investor Trust, as well as Bloomberg. Indonesia has reached a deal with the US to lower tariffs from 32% to 19%, but Jakarta has to let American goods enter its market tariff-free. How will this recent deal affect Indonesia's growth?
Again, let me take this. I think Alan, I will ask him to chip in. But Indonesia, of course, is the largest economy in ASEAN. It has a very sizable domestic market. So when we think about Indonesia, it's an economy that's primarily driven by domestic demand. So in a way, in that sense, Indonesia is less vulnerable because it's less open to international trade. Having said that, the United States is about 10%, I think, of Indonesia's total exports. But China is more than double of that. So Indonesia's largest market is really China, not the US. So from that point of view, I think Indonesia is reasonably protected from the recent round of tariffs. So I think, again, international trade is important, even though Indonesia is a closer economy than other regional economies. I think it's important also for Indonesia to continue to diversify its export markets. And on that, our recent sort of consultations with Indonesia shows that the economy is really doing very well, and its domestic demand-driven growth momentum is there, and both monetary policy and the fiscal policy have a lot of space to support the economy if necessary. So,
if I could,
Alan, please.
Yes, if I could clarify as well that our latest outlook numbers here has actually incorporated the 19% tariff on Indonesia. So that's our baseline assumption on tariff on Indonesia. I think just to add is that, well, 19% does look relatively low given the current state of conversation, but it's actually still higher than the 10% that it was initially Indonesia was initially facing. I think the downward revisions on our growth projection reflects that impact on a weaker domestic demand. Just that small clarification.
Thanks, Alan and Dong. Following up from the same question, there's this question from Bloomberg. The trade deals in Asia so far have included a tariff of around 20% and promises to open up the domestic market to US goods. Should we think about that 20% as the upper level for tariffs in the region? If so, what would be the economic impact, given that it's better than expected for many countries?
Just quickly follow up on that. I think in terms of the question, as I mentioned earlier, we are not privy to the negotiations. So some of the negotiations are still ongoing. What we have done is to assume that the letters those letters sent out by the US authorities, by President Trump, would be the tariff rates prevailing as of August 1st. So if the negotiations would result in lower tariff rates, of course that would provide some upside to our forecast numbers. That would be positive. So, certainly we would be happy to see that, but I don't think we can assume that 20% would be the benchmark going forward. I don't know whether Alan has anything to add on this.
And I think a very key point and key details that we would need to actually get clarity on is actually the treatment on currently exempted products, really. The bilateral letters that were sent was applicable, the rates are applicable to the reciprocal components of our exports to the US. What it doesn't include is actually the sectoral treatment. As I mentioned earlier, I think this is very key for many of our economies because currently semiconductors, pharmaceuticals, and so on are exempted, and these are key products that we are exporting to the US. So even if we are looking at deals at 20% or so, we do not know the treatment on these products. So I think the details on this tariff on these exempted sectors will be key on for us to actually ascertain whether the impact will be better or worse.
Okay.
Just let me end.
Okay. The next question is on the Philippines, sent over by the Philippine Star and Manila Bulletin. Were there revisions to the GDP growth projections for the Philippines? If yes, what were the reasons for the changes?
Since I've monopolized the early answers, let me pass this on to Alan.
Yes, we have revised our growth forecast for the Philippines from and now we are looking at a growth of 5.6% this year and 5.5% next year. Previously, we were looking at 6.3 for both this year and the next. Growth in 2024 was 5.7, so there's a slowdown of growth, marginal slowdown in growth. So this actually reflects a number of things. I think the main thing is actually the expectation of slower global growth. Now, the tariff impact on the Philippines itself is, the direct impact itself is not very large compared to other parts of the region, given the more domestic centric structure of the Philippines economy. But there will be a broader impact on global slowdown on the economy. So this will affect both exports as well as business sentiments and investment activities in the Philippines. So therefore, we are projecting a slower growth. And for this year itself, we're also looking at the actual outturn of the numbers in the first quarter has been showing that growth momentum is slower than initially expected. So this forecast incorporates that as well. I think despite the revision downwards, I think it's important to emphasize the growth in the Philippines continue to be very robust, and it will continue to be driven by robust private consumption activities, given multiple factors, including continued stable labor market conditions, slower inflation currently, and also expectation of robust remittances going forward.
Thanks, Alan. So the next question is on Vietnam, and I'll be grouping the questions sent over from Business Times and VTV. Could you kindly explain why Vietnam's growth forecasts for 2025 and 2026 were bumped up? And the next one, Vietnam aims for 8% GDP growth this year and higher in the coming years in the context of many challenges in the world economy. In your opinion, what policy solutions should Vietnam pay attention to in the medium term?
Thank you, Karen. Let me also start. I think the bumping up or the revision up for Vietnam's growth is really a reflection of the much better outturn in the first half of the year. So that automatically gave us the room to revise up the whole year forecast for the growth. But of course, the impact of the tariffs would be negative. So that's important to recognize. So when we think about ASEAN economies, so ASEAN+3 economies, in ASEAN, Cambodia and Vietnam stand out as most exposed to the U.S. tariffs because U.S. is the largest export market for both Cambodia and Vietnam. There, of course, the exports mix is different. Cambodia has a disproportionately larger share of garment, footwear, and travel goods, whereas for Vietnam, it's much more diversified in terms of product mix. But the US continues to be like 30% of its total exports. So that's an important feature of its structure. Now, Vietnam certainly has some policy space to support economic activity, because when exports are important and there will be spillovers to domestic demand, the overall momentum will be moderating as a result of that. So there's room for policy support if necessary. But going beyond the short term, I think what is more important is also to integrate much more deeply with other regional economies in attracting FDI, in upgrading the product structure. And in that regard, some of the ongoing reforms in Vietnam are important, in particular, making the investment environment attractive, make the infrastructure more efficient. All these issues would position Vietnam in a much more resilient position going forward. I don't know whether Ellen has anything to add. Okay, all right.
Thank you, Dong. I think you have also covered a similar question from Kiri Post with regard to Cambodia's garment, footwear, and travel goods sector. So let's move on to another regional question, this time on monetary policy. This question comes from the 21st Century Business Herald. In July, Malaysia and Indonesia successfully cut interest rates to stimulate the economy. At present, the Fed's expectations for rate cuts have eased. What monetary policies do you expect ASEAN economies to adopt, and what is the path of rate cuts?
Right. So let me take that question. As I mentioned earlier, quite a number of central banks and monetary authorities have already taken action to ease monetary conditions in anticipation of the impact of the tariffs. So that's very positive, and most of the central banks in the region, in our view, have room to ease further if necessary. Of course, they need to proceed cautiously. As many of you know, the central banks in this region, some of them have inflation targeting regimes, others have monetary policy regimes that take into account more indicators and intermediate targets. So they have to proceed cautiously. More broadly, global financial conditions have an important impact in affecting central banks' decision. And one important consideration, as I mentioned earlier, is capital flows. So if there are capital outflow pressures, that would certainly put some constraints on the central bank's ability to support domestic economies through further easing. But so far, as I mentioned, the region has fared really quite well in terms of capital flows and exchange rate movements. That would be a very supportive environment for central banks if they decide to ease further. And of course, monetary policy is not alone. When we think about macroeconomic policy mix, fiscal policy has also its role to play, and it can coordinate with monetary policy, for example, by providing more targeted support in this kind of environment. When certain sectors are affected more than others, certainly fiscal policy can be much more targeted than monetary policy in providing support. So let me stop there. Thank you.
Okay, thank you, Dong. We have time for one last question, and this time we're ending with Malaysia. We have a few questions from Sincho Daily, The Edge, and RTM Malaysia. So AMRO lowered Malaysia's GDP growth forecast for both 2025 and 2026. What are the factors that caused this apart from US tariffs? And given Malaysia's current economic fundamentals, is the country expected to maintain strong growth this year, despite global trade tensions and tariff-related uncertainties? Do you see room for Central Bank of Malaysia to further cut rates this year? Let me know if you want me to repeat the questions again.
No, it's fine.
Alan, why don't you?
Yes. We did revise downwards the growth forecast for Malaysia. So initially we expect this year to be 4.7%. Now we are looking at 4.2%, and next year from 4.5% we are looking at 3.8%. And this really reflects one major factor, which is the impact of the tariff, as well as the subsequent impact on slower global economic growth. So I did see some of the questions from the Edge as well, asking whether this has already incorporated some of the subsidy rationalization and so on. Yes, we have already incorporated all those in our latest forecast as well, and these are what we are looking at. So in terms of the growth, I mean, growth close to 4 is not very bad growth, right? It's still a pretty high growth, and I think importantly is to highlight that the growth is continue to be supported by domestic demand, especially private consumption activities. There is room for upside if the tariff situation turn out to be better than what we have put in or assume. So currently we are assuming the bilateral letter rates for the case of Malaysia. So and we understand that negotiation is still ongoing between Malaysia and the US with this regards. In terms of policy space, I think what the central bank has done to lower interest rate was a preemptive move, given the fact that we are looking at a situation in which the outlook has become considerably more uncertain, stemming from external environment, and with the as well as with the outlook of a more benign inflationary trend that we are seeing in Malaysia at the current juncture. I think if the downside risk to growth worsened, I think there is room for the central bank to continue to provide a more accommodative policy support. But I think ultimately it would be dependent on the latest data that's coming out for the case of Malaysia, if the situation will continue, if the outlook will worsen or not. Yeah, let me end here.
Okay. Dong, would you like to say anything else before we wrap up today's media briefing?
I think this has been a very interesting session for me. I've learned a lot from the questions themselves. So certainly this is a period that there's a lot of anxiety. We have to live with uncertainty, but with the determination we have seen in the member authorities. There's room to provide further support if the outlook, particularly in the adverse scenarios, if these adverse scenarios materialize. But looking forward beyond the short term, I think there's a lot of urgency in spearheading the initiatives for intra-regional integration. With that, let me stop here. Thank you.
That brings us to the end of today's media briefing. A big thank you to you, Dong and Alan, for your insights and perspectives. And thank you to all of you for joining us today. If we didn't get to your questions, or if you'd like to follow up, please feel free to email us. And you can also visit our website to download the report, press release, and presentation slides. We hope to see you again soon. Our next press conference will be on the 9th of October, when we launch this year's ASEAN+3 Financial Stability Report. Until then, stay safe and have a great day.